Looking at the Nasdaq 100 and the SP 500, we got exactly what we anticipated coming into today. Looking at the SPY specifically, I want to talk about how we ended the day yesterday. If we get right into this chart, look at where we ended. I mentioned our key level around the 388.5 region. It lines up with all three of our key levels to be watching. Our lows back on July 18th from 382 down to 380.5 being our major support here, which has held around 3 times now. Going into the mid level, we're talking about 385.8. We're talking about it here in a second. But the big level, the previous lows of this trend, September 6th, right there, you can see it crystal clear. We came up, we touched it yesterday. I ended up adding more to my puts. As I mentioned to every one of you, go look back at the video. I'm staying as transparent as possible with you. That's where we rejected, which was our previous low and our previous level of resistance to be watching. Now, before we get into the key news that will be released tomorrow, very big volatile news is released tomorrow. You need to hear about it in the near term future. We're going to talk about it here on the channel. Before we get into that, I want to ask and recommend that you like and subscribe the channel. The liking does help out for me. The subscribing is for you. Every single day I'm releasing videos on the market about what I'm looking at. And I want to be very clear about this. If you look at my thumbnails, I'm not going to lie. They're a little clickbaity, okay? But when you come inside this channel, you're always going to get transparent information. I do not lie. You cannot find one thing that I've lied about here on this channel. And I stay transparent as possible with you, the viewer, at all times. And if you're also interested, our Discord link is down below. Again, these are the same puts I had yesterday that I mentioned. Those contracts got all the way up to 880 roughly. And then I started selling some roughly at 840. And then I ended up obviously getting some more at the end of the day, which I'm going to talk about specifically here in the video. Let's get back to it. So we're going to be talking about some of the stuff we're anticipating, but I want to just go over what we're doing right now. Now, before I go too far into this, I want to express what I'm not doing, right? So we've had all three of these levels marked out since the beginning of the week, right? I am not day trading this back and forth, back and forth, back and forth, right? I think that's not a smart mentality or a smart thing to do here. I want to actually just hide the indicator so it looks a little bit cleaner. I don't want to do that because if you're doing this back and forth like this, day trading here, yeah, you can be successful and you're going to get a few winning trades, but you're playing Russian roulette and you're not controlling your risk. Why? Because one, you're going to get smaller moves here. And again, I know lots of people that have been trading this and making good money in the Discord, for instance, using these key levels, using our daily watch list. However, what I'm saying is here, you got your breakout here, rejection, and you came all the way back down. What I did personally was start setting up my position. I started entering my puts here and I started adding all the way up to here, like I mentioned yesterday. Okay. I was very clear about what I was looking for there, right? Because I'm playing the big move. And what the big move is showing me right now is very similar to what we saw back on roughly, I believe it was the 15th and 14th, right? So if we come in here, let's look at what's happening. We had our big drop from right here, September 13th. You drop down, you bear flag, and you drop down again, right? We looked at this move, we traded that move, and hopefully we're going to trade the next move here. Now, the important thing to know here is you did not have your Fed meeting. Right here, you have your Fed meeting. So we're operating in a little bit of a bigger bear flag. It's a little bit wider. However, in my opinion, it still looks like it's setting up perfectly. It's important to realize as well, yesterday, you were getting rejected from your top key level. Today, you're getting, I don't want to say completely rejected, but you're finding resistance at the bottom of our last line of support here, our last line right here, right? So I want to highlight these very important things that are going on right now. Now, before we get back into this charting, I want to talk about specifically the news surrounding this. So going into tomorrow, what are we looking at? Okay, very quick, very sweet, very to the point, right? Today, we had our housing data, which I told you yesterday would be terrible. You're building permits, new construction, right? New construction on residential homes. Down. We anticipated this. This is very indicative of a real estate slowdown. Housing starts rose, right? This is more for rental properties. That's not a surprise that rental property construction is going up. Why? Because rental permits, rental pricing is as high as it's ever been. Yes, to rent a home, you're paying almost double of what it costs to actually own that home because interest rates have risen so high and they're going to keep rising. So it's very lucrative to be in the rental game business right now. If you're in real estate, I'd appreciate if you comment down below so people know that I'm not just talking out of my ass here, right? So as we get back in here, next up, we have existing home sales. I anticipate that will be terrible tomorrow as well. But the big thing going into tomorrow, I talked about it yesterday, your FOMC economic projections. We have a lot of stuff happening here. They're going to give their overall viewpoint and their outlook for next year and the remainder of this year, which was a 4% ceiling on rate hikes, but they're most likely going to raise that. And they're also talking about not cutting rates at all next year. And if that is the tone of not cutting rates, you will see blood in the market. Why? Because if rates stay this high, then it sets us up for a period of stagflation, which we've mentioned here a lot on the channel. What's important to know though, going into this rate hike, we know a few things. We know that inflation has not slowed down. How do we know that? Because CPI rose even with energy prices falling dramatically here in the United States specifically. The barrel is dropping because of what we're doing with our reserves, and we've established and talked about this as much as possible here on the channel. So I don't want to spend too much time there, but I want to highlight that we know that inflation is still persisting. Why? Because job numbers have not started to go down yet, which they need to. They've expressed this. Why do jobs need to go down? Because employers are paying people more to satisfy the need of inflation. So we're going to need people to start losing jobs, and this all sounds terrible, but it's a part of the process and the way the economy works. That's just the way it is. I'm sorry. It's tough to hear. It's the way it is. So what we're going to do is get back in here. Now, when I get back in here, I want to show you a few things. So we're going to look at really quick. Just bear with me. When you're in a bear flag, I'm going to talk about technicals here. When you're in a bear flag, what are you looking for? Okay, so when we look at any type of flag, if you're in a bull bear flag, so if you're a bull flag and you'd be moving like this, you'd be moving sideways and you pop back up hypothetically. And a bear flag, you move like this, you break back down, you move again, continue down. You're looking for consolidation on volume. You're looking for decreasing volume. Now, what does that mean here? With Nasdaq and SPY, you're operating in this sideways trend, specifically on futures. As we look, I want to highlight the days here. We're in the 20th. Basically, it starts at the 16th and the 16th and 18th, or sorry, 16th and 19th, my bad. Going into the volume, I'm just going to use, it's just super simple to use, so bear with me. I'm using Yahoo Finance. If you want to track this, you can for yourself. You're going to go to Yahoo Finance, type in whatever ticker. I'm using SPY to just go over this for you as quickly as possible. And you go down to historical data right here. And this is where it's going to show up. Now, we can look at the 16th and the 15th, right? I want to highlight that. So the 15th and 16th were your big drops. Okay, 16th is when you bottom, and then basically 18th through the 20th, we've been popping back up a little bit, making this flag. What's happened during this time? So during the downside, you saw your most volume, right? So it's imperative that most of the time when you're getting your big push, that's typically when the most volume flows in. What happens when you consolidate inside of a flag? Typically, volume will decrease. Over the past 2 days, we are seeing volume what? We are seeing volume decrease with this move towards the upside. There was a reason I told you on Friday going into Monday, we expected a bounce on the market, right? And with that bounce, I was looking to take a short position, which I was taking profits on today as well already. Okay, very important to realize what's happening here. So we've established big volume on the way down. On the way up, volume has decreased. What does that mean? Does that mean you're guaranteed to get more downside? No, that is not what that means. That does not mean you're guaranteed anything, right? These are just setting up things to improve your odds of success, right? What is the goal of trading here? What is my philosophy of trading? Reduce risk at all cost. That's my goal when I'm using technicals, when I'm looking at fundamentals. I have an idea of how I view the market to move, and then I'm looking at the technicals as well as the fundamentals to reduce the chance of me losing money, okay? To side with whatever I'm looking the market to do. But I'm always coming at it from a non-biased viewpoint because my goal here is to make money, not to be right, okay? And yes, I know you're saying, Tyler, well, don't you need to be right in order to make money? Yes. However, if my original thesis is wrong as far as us being bearish and we have a bullish outlook, or the Fed comes out tomorrow with an extremely aggressive to the upside move, then I'll have to flip based on what they're giving me and based on what the market is telling me. But as of right now, I am looking at the downside based on all the notes given to us. So what I want to do here is actually go into Cheddar Flow. And Cheddar Flow has been one of my favorite tools to look at. So we're going to look at is what's happening with the biggest orders on the book. So Qs, we have a little bit of interesting behavior here. You're seeing block orders, first of all. They're your two biggest orders that are blocked. These are less aggressive, conservative plays in the money calls most likely coming in. Very low risk. This is important to know, okay? I would consider blocks more of a hedge type position to protect their overall portfolio. Okay, so we're seeing the highest order here being 1.4 million, 1 million, some decent sized positions. But where things really get interesting is when you come over to SPY. And this has been the story that I've been telling you here on the channel, okay? Where are these orders coming in? Again, I got to highlight back to this OPEX nonsense. Everyone's saying OPEX this, OPEX that. OPEX is nothing. Get that out of your head. OPEX for September was almost irrelevant. And when I say that, I'm just saying go look at what happened Friday. This was your movement. You had a lot of volume coming in, but you completed your move down and then it was sideways here. Okay, I'm just saying that was your OPEX move. You know, you can't argue with the truth. That's just, it is what it is. But where have we continued to see volume step up time and time again over the past month? My apologies. October 21st, your biggest orders, your top order, 9.6 million into SPY puts, October 21st, 362. Your top order here, 8.3. This is a weekly contract. This is the only contract right here. And then your next one's going to be for almost a year out, and that's a call. And again, it's a block, more of a hedge. But if you look here, time and time again, of your top 20 orders, 90% of these orders are coming in to October 21st. And they're heavily aggressive. Here at the end of the day, I want to highlight this right here. This order, this order, this order, and this order. 4 orders for roughly $4 to $5 million each, $20 million in puts for 366 October 21st at the end of trading day at 3:05 p.m., 5 minutes after the market closes at 4:06 because it's in Eastern time. But I want to highlight that. Okay. Do I find it coincidental? No. Have we been mentioning this time and time again? Yes. And I also want to highlight something else here. With this minimal volume, the decrease in volume, as you are trying to push up, I want to highlight based on Bookmap and based on level 2 data, based on the book, right? There has been minimal upside resistance, right? So look, you're bouncing up and you can see all the liquidity dissipates. There's no walls here and you're pushing up. Okay. Throughout the day, when you're trying to push up this morning, minimal liquidity. You had liquidity finally step up right there. And what happened? You got shot right down to the depths. So I want to highlight what's happening here. You have basically no ceiling here, no real resistance while you're trying to push up here. But what happens time and time again? Buyers continue to just stop. Now, I want to express and go over something very important right now. If we come into the market tomorrow and Powell and the Fed have a very strong outlook on the economy and they don't want to raise rates anymore and they just look at the market in a very bullish sense, then you will bounce. Okay? I cannot predict what the Fed is going to say. No one can predict what they're going to say. But based on Jackson Hole, I have to anticipate they're going to continue to be bearish and hawkish. Okay? I have to. So I want to make that very clear. Also, while buyers were trying to step in, look at the minimal liquidity. When sellers stepped in, look at the liquidity. This tells you very quick, without a shadow of a doubt, what's happening here. Okay? Again, I'm not making it up. I am just showing you the data. Don't shoot the messenger. I'm trying to be as honest, as transparent as I can with you as possible. Okay? I'm loading up the level 2 data, the dark pool coming in here, the iceberg orders. So 1 second, I want to actually let that load in for you as well. You were seeing some buying throughout the day, throughout the beginning portion of the day. But it's important to realize what happened at the end of the day when buyers stepped in. We saw this on Friday as well. What happened? So we saw some buyers stepping in here and there. Decent buyers stepped in here as well. But guess what happens? While you are bouncing here, look, you are bouncing. What happens? Large sell orders and short orders come in once again, preparing for this Fed meeting, okay? And what does it line up with? It lines up with these SPY puts that are being bought as well. So I just want to make that very clear. Now, what am I saying here? Am I saying that you have to go down tomorrow? I am not saying that. I still have positions set up for downside. Even though I did profit on some of my positions today, I still have more downside runners left. So I want to highlight that, let that be known, okay? I am being transparent as possible with you, okay? But I want to highlight that this could flip if the Fed comes out and changes their tone, looking for some upside, okay? So I recommend going into this being very careful. Not financial advice, do your own DD as always, but you need to be careful during this time because this is the most risky and volatile atmosphere. Before I let you out of here, I want to cover a few of these big fundamental aspects as well. VIX, you're operating almost in an ascending triangle, making higher lows, getting ready to break out of this $27 level. If you break above 28, you're most likely going to 30 immediately. This is the only downside push that we have not at least pushed to $30 yet. It's worth mentioning. If we look at NQ, Nasdaq, SPY, the SP 500, look, this is the only one we have not broken above yet. It's worth mentioning. The DXY, again, I mentioned this yesterday, the day before, you bounced right on your support as usual. I'm not making these levels up. Again, I let all of you know this as I post it. Before I even enter my trades, typically I'm mentioning everything here first. Junk bonds, what happened there? They're coming right down. Remember yesterday we mentioned this? You hit your key level and boom, you're shooting right back down. The most important one, our 10-year versus our 30-year yield. The best overall indicator of inflation. You are sitting at a 90.999% inversion right now. You are on the verge of inverting completely. The last time this happened was June 14th. What happened on June 14th, the last time you inverted? Let's go look what happened and where you were. We're going to go back to June 14th. Boom. June 14th and June 9th. You ended up dropping massively going into this data. I'm not lying to you. I'm just going over what's happened previously and what is happening right now. Take the information for what you will. But as usual, I am not going to change my content based on comments in my videos. People are getting upset by the way I'm making these videos and some of the overall viewpoints that I have. But as usual, I am not going to change the content. Again, unbiased as possible, showing you the winners, showing you the losers every single day. I'll see you tomorrow.